Hi, welcome to the first episode of The Dumbest One in the Room, where I ask the dumb questions so you don't have to. So today, to kick us off, we have Matt Merlehan, a crypto accountant, been doing it for years. So who best to talk about money and finance than Matt? Welcome to the show, Matt.
Thanks for having me, Jason.
So obviously you've been a crypto accountant for a long time now. So how long have you been diving into the crypto scene?
I've been in the space since 2017. I got in very late to that cycle. I got into it just like a lot of other people did early on. I got influenced by the prospect of making a lot of money really quickly, and that did work for the first couple of months, I would say. Then didn't sell, number went down, and I had two options at that stage. I could either get rid of it, forget I ever tried investing in this space, or I could learn a bit more about it. And I decided on the latter and realized I really enjoyed and found the space really interesting. So I kind of came for the Lambo and stayed for the revolution, as a lot of people have said in the past.
Yeah, 100%. So obviously there's a lot to unpack in crypto, and that's obviously the purpose of this podcast to teach people. But today, for the first episode, I actually want to go a long way back. But forget crypto, forget all of that. Let's talk about just money. So obviously a real basic question. Why does money even exist?
Yeah, it's a technology, probably arguably one of the most important technologies that humanity has created. It serves a purpose for people to be able to communicate value between each other. It allows us to do business. And there's a lot of podcasts out there that sort of go into detail around the history of money. I won't go into too much detail here, but I know Bankless did a great episode early on about the history of money. So definitely encourage people to go have a listen to that if they're curious. Yeah, at the very base level, money serves as a way to exchange value. It's, I guess, the three things a lot of people will sort of attribute to money is a medium of exchange, a unit of account, and a store of value. And that's really the whole crux of what money serves to do, from way back when we were still bartering with each other in the Stone Ages to today with digital money.
So money was created in some form a long time ago. So what was the problem? Why did they need something like that?
Yeah, when you first go back to the history of how people coordinated and sort of interacted with each other, there were some people that were really good at growing certain things, or there were some people that were really good at making things, and they wanted to be able to exchange things that they didn't have with people, and they wanted to use the products that they were really good at using and producing as way of exchanging value with each other, what we commonly know as a barter agreement. You might try to sell 10 apples to someone and you might want oranges in return, for example. And basically what would happen is you would have an ongoing agreement, or you would have a lot of communication with people to try and figure out, well, if I'm going to give you 10 apples, how many oranges am I going to get in return? And that became really difficult because you don't just have to do that for oranges. You have to do that for every other product that apple grower, for example, may want to swap and acquire. So it became really difficult, and barter agreements still work pretty well today in certain instances, but very quickly people realized that they needed something that represented value. And there's a lot of innovation that's happened over time. We initially started with things like seashells. We then found the scarcity and the preciousness of certain metals like gold and silver. That started to become that medium of exchange for people. So you didn't anymore have to create value and argue about the value of ham and oranges to apples. You could say, all right, well, apples we're going to agree is X amount in gold. And then you can take that gold and use that to exchange with any other product that you want to purchase. So that solved a problem early on. And as time's gone on, people have realized, okay, there's some shortcomings with gold and silver and other metals.
Pretty heavy to
So we
pass
tried
around,
to
isn't it?
innovate on that. Absolutely. Yeah. I'm not sure if you've been to the Perth Mint, but there's a 1 ton coin in their mint, real gold, and worth a lot of money. So they spend a lot of money securing that coin. But I guess its best feature is also its worst enemy, which is the laws of physics. It is
Yep.
incredibly heavy to try and pick up 1 ton of gold. So yeah, if you've got 1 ton of gold, it's going to be really difficult for you to be able to not just exchange that for something else, but also to carry it around to secure it. You wouldn't be able to split that up into smaller parts. If you only wanted to sell 1/2 ton of that gold, good luck. Very difficult to split that up. So it's not fungible as we will use as a term very frequently when talking about money. And that then led on to gold-backed currency. Instead of carrying around your gold, you could deposit that in an institution like a bank. They would then give you a receipt that said, okay, you can come back to our vault at any time with this receipt, and we will give you back that gold that you deposited with us. That then led to gold-backed currencies. It became a lot more fungible, a lot easier to carry around. And a lot of people from there then realized that this was the beginning of the currency that we use today.
Yeah. So obviously, and we'll go deeper into this as to why the current system has broken, and has problems. But when did money sort of stop working the way it was intended, as far as that, like, gold backed and that promissory note?
Yeah, a lot of what has gone on in the most recent years is the rise of unbacked or partially backed currencies. We also refer to it as fiat currencies, where previously one note that said it is worth 1 gram of gold, it's now fully backed and becomes partially backed. You no longer have 1 gram worth of gold that you can go and redeem fully from the bank in exchange for depositing that note back with them. So you now have a situation where the currency that we are using is based, and the value it is derived from is the faith that we place in our government. For some governments, that's totally fine. But as we'll probably find out soon, there's some situations where that may not have worked out too well for the people of that society. It's also given rise to, this is kind of where Keynesian economics comes into play, the idea that government needs to be in control of the money and spending it a certain way to prop up the economy. So that's kind of a departure from what we would call Austrian economics, where everything is backed primarily by something that we all agree is value, to now being able to switch on the money printer and start printing money whenever we like. That's where it starts to, I guess, fall apart at certain points.
Yeah. So basically, what you're saying is that, like, that is basically a promise from the government that this $20 note is worth $20, and there's nothing to actually give it that value.
Yeah, very much so. A large chunk of it will be the faith of the stewardship of that government. There is some gold that they hold in reserves, but it's definitely not enough to redeem for that actual gold. If there was a bank run, so to speak, if everyone wanted to pull out some value from all the banks that hold that gold, there wouldn't be enough.
Yeah. And I've heard of things like, when we had the GFC, there was bank runs as well. And banks were closing their doors. You couldn't get your money. You couldn't take it out the ATM. Leads us perfectly
It's not
into the
fun.
next question is, what is wrong with the current financial system? What's broken about it?
Yeah, it depends on who you ask. Going back to that school of economic theory, the Austrian economic theory, they are not a fan of governments being able to fire up that money printer and just print money out of thin air without there being any measures or controls in place. So there's a lot of people that will say the fact that we don't have a fully asset-backed currency is a huge problem, and is a big cause for a lot of the issues that we've had. You did mention before GFC was a good example of when monetary theory sort of broke down. The market then experienced significant downturn. And in theory, there was too little too late. So a lot of that inflation before it came back down was because the money printer was going, people were spending and spending. And it got to a point where you end up with a bit of a situation like musical chairs. The music stops, everyone's rushing to get back to safety of the chair, and people start to realize they don't actually have a chair to sit on anymore. And that caused a lot of issues for a lot of people. Huge downturns in property values in the United States, especially. We're lucky in Australia. We didn't seem to be affected as greatly. We still felt it, but it was definitely not as pronounced as it was in the States.
Yep. So we hear this term inflation and how this, does inflation cause costs to go up, or is it costs going up that cause inflation? How does that all work, and how does that affect what my money's worth?
Inflation can be split into a number of different aspects. You've got your asset inflation, the increase in value of, say, gold, for example, if you were viewing that as an asset. We've seen even over the past year, like if you looked at the year 2025, the value of gold increased quite substantially. So there's the inflation of asset values that you could look to. It's consumer price inflation. That's generally the cost of being able to produce the assets that we then sell, consumable goods, your food that goes on the table every day, the oil that you put into your car, if you've got a petrol-based car, all of these costs that then go into producing products that then need to be on-sold to the end consumer. So consumers, businesses, when they see the increase in these prices of raw goods, that they then turn into either food on the table or a product to sell to their consumers, they then have to, by extension, put the price up for those goods that they're providing in order for them to continue to run profitably. So it does become a bit of it cycles through the system by doing just through natural increases further up the supply chain or further down, depending which way you look at it. There's a lot of increases in prices that get passed on to everyone at every stage of the supply chain, all the way down to the end supplier. So that's consumer price inflation. And then the third one is the monetary supply. So if you have, say, $100 million worth of Australian dollars and you decide to print another 10 million, you've now just increased the money supply by 10%, for example. And in theory, there are protocols in place. You can't arbitrarily do that, at least not in Australia. There has to be some checks and balances to be able to do that. But in theory, that's what is effectively happening. The banks are issuing debt to banks in the form of bonds, and that kind of leads into one of the other questions that we've got here, that you basically have money being created out of thin air, and that's being lent onto banks to eventually create this trickle down effect.
Yeah. So basically, if I get a pay rise of 3% this year, but inflation is 4%, effectively I've still lost money even though I've got a pay rise. Is that correct?
In the grand scheme of things, you've basically underperformed inflation. Therefore, the money that you're now receiving is, after your pay rise, worth 1% less than what it would have been a year ago. And that's just for headline inflation. That could be 1% that you're down by for consumer price inflation, for maybe a particular basket of goods. But as we know, there's certain products that don't necessarily go up to 4%. They don't increase 4%. It could have been 20%. It could have been even more than that, depending on even where you live, what products you buy and where you live. The inflation could be even more than that. So you could be even better. You could be even better off. You could be worse off. But overall, you've probably lost out by 1%.
And that also goes for my money in the bank. If I'm trying to be conservative and risk free, and I've just got my money in a savings account earning 2.5, whatever the current rates are, it's still going backwards if that number is lower than inflation numbers. So safety does come with its own risks.
Yes, yeah. It's an opportunity cost, as I would put it.
Yeah. So when you said earlier, governments print the money, how can they do that? Yeah. How does that work?
So most governments, they have their own local currency. The United States, for example, has the US dollar. Australia has the Australian dollar. Vietnam, they have the Vietnamese dollar. They all have this currency for their own jurisdiction that they control. So because they have control over the issuance of the money and the rate at which that is printed, they've got ultimate power here. So I guess the trade-off or the risk in that situation is if you do have an irresponsible government that has decided, you know what, we need to spend money in this particular area, they have the ability to do that. And I guess depending on what kind of government it is, whether it's a democracy, a dictatorship, anywhere in between those two on the spectrum, it could mean that they have a lot of checks and balances before they can actually print that money, or they could be able to just do it at whim. So there's a real risk for people that government of the day is more or less corrupt and that they misuse that money printer.
So, and is it because from what I've understood previously, the government doesn't actually print the money, it's the central bank. And this is why the government has debt.
That's right. Yeah. So when we look at a debt clock, I know we have one for Australia. The US is probably the best known one. The money that they are printing is effectively debt. They're issuing these bonds so the central bank will issue bonds to other banks. Effectively, they're saying, you can trust us, we're the government. It also means that there's less risk in theory that the government is going to default on that debt. So by distributing that debt to banks, the banks on their balance sheet basically now have an asset. They will then use that asset to lend to other people, or they will then use that to generate income for themselves. That can be in the form of issuing mortgages or issuing business loans. So in theory, printing this money is designed to be distributed through the entire system. It's supposedly going to trickle down through the banks to businesses and to investors and individuals that might want to purchase a house, for example. It doesn't always have that intended trickle-down effect. Sometimes the banks may decide that they're going to hold on to more of that. And instead of investing that in individuals who want to buy a house, for example, they might decide to take some risks with it and maybe speculate on other financial markets as they see fit. So sometimes that money printed, the government may have had good intentions, but it's not always guaranteed that all of that trickles down to society or the people that they may have wanted that to be distributed to.
So what's the downside of a government printing money? Like, why don't they just go, let's just print trillions of dollars and buy stuff and let's be rich?
Yeah, it's, I guess, a classic example of inflation. When you print more money, that money is now worth less. If you've got, say, $100 million worth of gold, but then suddenly there's another $100 million worth of gold that you've found in a chest somewhere or under the earth somewhere, and you're able to extract that, suddenly people aren't really thinking that that gold is another $100 million. They're still going to give that total supply $100 million. So now the value of that gold has been cut in half. So in that situation, very, very similar when you attribute that to money. If you print 5% extra money, the money that is in circulation has increased by 5%. And unless the value of that money, if the value of that economy if that hasn't grown by 5%, then effectively the value of that currency has gone down. And that's where I guess taxation comes into place and GDP or gross domestic product comes into place. If your economy is doing well and it's growing, it's making money within its own ecosystem and from abroad, then you're effectively diluting the value of that.
Yeah. So, and I'm going to throw another one in here: the fractional reserve banking system. I've heard this term and why it's not so great. Can you explain how that system works?
Yeah. So basically, instead of having 1 gram of gold, for example, that fully backs one of those notes that you have in your wallet, for example, the bank might decide that they're going to only attribute 0.5 gram worth of gold to that banknote. What it means is they can basically lend out more of the gold that you have deposited to generate more money without having that note fully backed. So it gives them the ability to effectively rehypothecate is the technical term. You can issue more debt against the same asset and you don't have to find more assets to back it. So having a partially or fractionally backed asset allows the banks effectively to have more liabilities than they have assets, which is fine when people and the markets generally are operating rationally. But if there's a scare in the market and people decide they want to flee to safety, that can be an issue, because if everyone tries to go and pull their money out of the bank, then banks are going to close down, as we sort of touched on earlier. The banks won't have the money to be able to give out to everyone. And there's going to be some people effectively being caught holding the bag.
So basically, I deposit my $100,000 savings account. They've lent out 90,000 of it. I come back in. I go, hey, I want my 100 grand. Sorry, mate, we've only got 10 of it. So if everyone does that, can collapse the system.
Yeah. Yep. In theory, I mean, governments will very frequently try to prop that up, and they will provide the funding to the banks to be able to meet those demands. But in theory, if there was no government intervention, then yeah, you would effectively be left illiquid. Well, these banks would be left illiquid.
Yeah. So who actually controls the money? We've touched on the government. We've touched on what the banks do with your money, but who's in the real control of all the money?
Depends who you ask, and I would probably still say the government. Whoever controls the currency controls everything, really. So if your government is using their own local currency, then the government is the one that controls the money. They have access to that money printer. They have the ability to print more of that money if they see fit. And that's, as we've sort of spoken about already, is sometimes a good thing and sometimes it's a bad thing. It relies on people needing to trust the banks and the government to do the right thing.
Yeah. So do we sort of need to trust the government? Basically, we want to use money. We've just got to trust them.
Effectively, if you want to continue working and participating in society, you effectively do need to trust that the money that you're using, and therefore the banks and the governments that sort of steward or control that money, are going to do the right thing. You do kind of have to trust them. So lots of people choose to trust them. And I think at the end of the day, it's down to being a choice now, especially with the advent of alternative currencies or alternative stores of value. You don't have to trust the banks, but a lot of people choose to in order to continue being a part of the society they want to be a part of and the lifestyle that they've become accustomed to.
So what happens if that trust is broken? Or do you even have examples of situations where the trust is broken and what's happened?
Yeah, I think Venezuela is probably the most notable example of when trust has been broken and governments haven't done the right thing by their constituents. I mean, Venezuela back in before the 80s, they were pretty well off country. They definitely weren't struggling by any means. They also had a large deposit of oil. So when oil prices were a lot higher, they did really well out of that trade. So yeah, for a long time, Venezuela was very, I would say, well off. They may not have been the strongest Latin American country at the time, but they did really well. Then you get to the 80s, there was a substantial collapse in oil prices. And when that happened, the government effectively lost a lot of revenue from export duties and even just royalties from those mining those oil miners. So you suddenly had maybe spending and expenditure that you had to commit to. Suddenly you have no revenue to sort of balance that against. So you're running at a deficit effectively. They struggled to cut their spending, and that it resulted in price or money inflation to the point where it hyperinflated. And hyperinflation basically means when the inflation of a currency gets beyond a certain point. I mean, we're used to 4%, or sometimes back in the day, maybe 2 to 3%. And that was a concern for us. Venezuela was at times 50%, 100%, 150%, up to about 1,000% at one stage annually.
Wow.
It got, yeah, and worse. Their currency tanked effectively. That continued on in the 90s. They had a banking crisis. They've even had currency controls where they basically stopped people from being able to get rid of their worthless Venezuelan bolivars because people were trying to flee to safety to something like the US dollar, something that was more stable than their local currency. They actually put controls in place to stop people from doing that. And then hyperinflation started up again in the 2010s. So they're probably the best and the most recent example of when trust is broken by when people can't make the tough decisions and they continue to print their money into infinity. Infinity pretty much leads their currency value to pretty close to zero. A really, really sad situation, and I guess is why Venezuela is actually quite a huge end user of a lot of crypto rails.
So to put that in a bit of context, people can understand 1,000% inflation. So if I'm on $10 an hour today, in 1 year, I need to be on $100 an hour just to stay the same.
1,000, yeah. It's pretty incredible. It also means by contrast, if you had $1,000 sitting in your bank account and it wasn't earning any interest, at the end of a year, it'd be worth $1 in last year's money, which is equally scary.
Yeah. So basically, we've talked about bank runs and they won't let you take money out the bank, etc., because they don't have it. But on an individual basis, can you lose access to your money? Can they just decide that no, you're doing something we don't like and we're not letting you have your money?
Yeah, we actually, in practice, it's something I've seen very, very frequently. In Australia, especially, there's limits that banks impose on how, like, where you send your money. I mean, it's under the guise of anti-money laundering, counter-terrorism financing, but there's also even just the ability to send money to an exchange if you wanted to invest in crypto, for example. There are limits on how much you can send to any digital currency exchange. We've seen frequently people even being debanked. You may not be able to transfer any more than $10,000 to one of these digital currency exchanges. They may stop you from doing it entirely. Macquarie at the moment is a classic example of that. But we've seen time and time again, people are engaging in businesses that use crypto, and their banks have effectively said, you've broken our terms of service. We don't like what you're doing. We're closing down your bank account. You're being debanked effectively. You have 28 days to pull all of your money out and move it somewhere else, and then we're shutting down your access.
So do they blanket treat people the same, or is it a little bit individual? Because I mean, I've sent money to crypto exchanges and I've got a phone call and they've gone, we'll make sure it's you. No, that's fine, all good. And I've had other people tell me they've been just shut right down for the very same thing.
Yeah, I've thankfully not experienced that. I've experienced the restrictions, which can be difficult, especially if you've got maybe a new startup and you do need to either on-ramp deposit fiat currency into an exchange to swap for an asset that you want to invest in. You do get limited by those restrictions from the banks. It's definitely not a consistent thing across the board. There are some banks that may be friendlier than others. The problem is it changes so frequently. We've had some banks that have said that their more than happy to give people a call and make sure that that's definitely what they want to be doing. We've had some people that have had text messages just saying, oh, hey, we saw you doing this. Does this sound like you? Make sure you let us know if it's not. We've had some people that will go to the branch and they will say that the tellers told them, yeah, it should be fine. There's no issues at all. Like, transfer what you want. And then you go to the other end of the spectrum and people have decided they're not going to do it at all. And they've gone to the point where it could have been $1,000, it could have been $100,000. There doesn't seem to be any consistent rhyme or reason for these banks. It always ends up in they will be debanked. At some stage, if you continue to touch crypto, these banks are making it so difficult for us to actually off-ramp and use the traditional system. And in a way, it's them trying to, I guess, control us in a way. And I guess it kind of begs the question, like, why should we care? If Australia, for example, is working fine, why I worry about going into crypto? If it's going to cause me so much hassle, why bother? And I guess in the way I would explain it is it gives you that optionality to have a way out if anything happens. And I think optionality is the most important thing that we can have. You don't want to be stuck where you are. You want to have a choice to do something. I think if you've got that optionality, if you know that there's a way out, then it's important for you to be able to access that.
Yeah. So all the problems we've discussed, now we're starting to talk about crypto. Many people see this as the solution. So does crypto solve all the problems we have with the traditional banking system?
It definitely solves some of it. It doesn't solve everything, but geez, over the 9 years now that I've been in crypto, I've seen some incredible advancements in the ability to transact with people across the internet or transact with code, really. And the fact that it's more accessible, it's more efficient, it's more permissionless than the system that we currently have. And it's not controlled depending on what blockchain you use. It's not controlled by a central authority. That to me is the biggest problem that crypto is trying to solve in one sentence. It's a more accessible, efficient, and permissionless financial system that isn't controlled by a central authority.
So is crypto going to become the system's replacement? Will it take over, or is it just something that will work alongside the current system? Where do you see it going?
It definitely won't replace it. It will definitely improve it, in my opinion. There's arguments for both sides. There's some really strong proponents of crypto that say the entire system is broken. We need to start afresh, and crypto is the answer. In my opinion, I've never seen any major step change in any system, let alone the financial system, that has just been completely ripped out and replaced. So I think there's a lot of components to crypto that make the existing system a lot better, a lot more efficient, especially. So I see the crypto system and the technology that is being built in this ecosystem as a major improvement, but it definitely won't replace it entirely.
So is crypto just about money, or is it more sort of systemic?
I think it's
improvement?
more. I think it's bigger than just money. It did start with that from the advent of Bitcoin back in January 2009. It started as a way to transact value between people over the internet without a central authority, but it's becoming a lot bigger than that. It's now becoming more about having an open financial system that is opt-in and permissionless and can be done during any time of the day with anyone at any other time of the day. You don't have to be transacting between 9 to 5 on a working day. You can do this with not just people in developed countries like Australia and the US. I think the system is being built for even those more developing countries that haven't had the same opportunities as we may be sort of used to or expect in our day-to-day lives. And that for me is a really big thing that I think is worth continuing to invest in. I mean, you see a lot of countries, especially Africa, they never had landlines. So they never had a way to communicate between villages or towns and things like that. But suddenly there was cheap access to mobile phones, cellular towers where you could get access to everything, and now everyone has a mobile phone. They completely skipped the landline era and went straight to mobile phones. And I feel like that's a similar situation for finance in these developing countries. They don't have great financial systems, but with a smartphone, an internet connection, and a little bit of internet financial tech savvy, they can have the same opportunities as we do in Australia.
So skip the banks, go straight to crypto. So basically, we've just hit the current financial system with a big stick and really knocked it around a bit. Now, I don't want to portray crypto as perfect because I don't think it is. So what are the weakest arguments and the flaws still with crypto?
I think the biggest thing that I see as being a weakness for crypto is the protection from either errors or malicious activity. We only have to see a small handful of cases where um, money has been taken. And in most other systems, if you've incorrectly charged someone for products, if you've had your credit card stolen, you would be able to call up your bank and say, hey, this wasn't me. My credit card's been stolen. They will charge back those costs so you don't have to pay for it. Whereas if you have lost access to your wallet or someone else has taken control of your assets and it's on this immutable system, then you're in trouble. You've lost it. There's very rarely any way to get it back. So a lot of people call for the crypto to be the death of banks, but I think there's a lot of fraud protection and a lot of consumer protection, especially, that will still be a strong part of our financial system. I also don't think it's going to be I guess it's not going to be the thing that completely banks the unbanked either. There's still a lot of countries out there that have reliable internet that don't have access to smartphones at a price that is somewhat affordable for everyone. And there's also a lot of gaps in technical literacy for people too. So there is a challenge there. And I don't think it's necessarily something that will always be like that. There is definitely going to be improvements as time goes on. But at the same time, I do think that there's going to be some pushback from people that think that that is definitely going to be the solution. Crypto's definitely not going to solve everyone's problems.
So if I'm in a stable, developed country, why do I even need to pay attention to crypto if it's more for underdeveloped countries?
I think it's for everyone. It definitely has benefited developing countries more up to now. Developed countries are definitely seeing more and more benefits from the invisible integration effectively of crypto into our financial system. And again, I think having a way out, as we sort of mentioned earlier, I think that's the important thing for a lot of people. You don't want to just blindly trust that everything's going to be okay. We only need to see what's going on at the moment. In 2026, there is a lot of uncertainty. There's a lot of promises being broken. People have previously said they're not going to do something, and then suddenly they've gone full 180 and done the exact thing they said they weren't going to do. So I think if you exercise a healthy amount of scrutiny, a little bit of pessimism is definitely not a bad thing. You don't want to go full doomer, in my opinion, because I think you waste your entire life dedicating yourself to something that may not actually happen. And if that was to happen, then my God, it's not a world I want to live in. But the important thing is having a way out in case things go wrong. That to me is the biggest unlock that crypto gives us. We previously didn't have that unless we kept gold in our backyard somewhere, or if we just had a shoebox of cash, which really limits your ability to grow financially, and it limits, I guess, the amount of trust that you have in the system. And why bother being in a society if you don't trust it?
So I'm sure you've heard as well. I've heard many people say, yeah, nah, look, that crypto stuff, I don't understand it. It's too hard. What I'm doing works. Why change? What are those people making a mistake? Like, should they be looking at crypto, or is it fine just to carry on like they have been?
It depends. It depends on your financial literacy. If you've never invested in the stock market, you don't know what you're missing out on. And it's the same for crypto. A lot of people at the moment will invest in crypto because they see potential for future increase in the value of the assets that they're investing in. So maybe it's it may not be a financial mistake. Maybe it's an opportunity cost. But if you don't know what you don't, they say, I would almost argue that ignoring crypto completely is a potential knowledge mistake. We only need to see how important the internet has become in our daily lives. And even as recent as the last few years now, with AI becoming very mainstream in its adoption, if you fail to keep up with the advancements in technology, you will very quickly get left behind. In my opinion, cryptocurrency is exactly the same. It is a new financial technology. And if you aren't at the very least aware of what is going on, and if you're not aware of how these changes are going to impact you, then you will get left behind.
So, if we had to get people to remember one thing we've touched on today out of this whole conversation, what's the most important thing we've talked about?
At the end of the day, it all comes down to coordination. At the same time, would you rather trust people that are put into power and people that have been trusted to look after certain parts of society? Or would you rather trust mathematics and code? For me, you can trust both of them, but if I had to pick one over the other, it'd be maths and code. Over people, unfortunately, we do seem to have a history of making mistakes, whereas maths and code, it always operates as intended. So I feel like if we're going to trust one over the other, it'd be maths and code.
100%. Totally agree. Time to wrap up this conversation, Matt. But again, thank you so much for coming on. I think we've touched on a great deal, and I hope people have learnt a bit about the current system and where we could be heading. So thank you very much.
No worries. Thanks for having me, Jason.
See you, everyone. Bye.